This conference will now be recorded.
And without further delay, I'd like to introduce Chris Eiler. He's the Executive Director of the Northwest Region U.S. Chamber of Commerce, and he'll be giving the presentation today. So, Chris, it's all yours.
Great. Thank you, Sean. Again, as Sean said, my name is Chris Eiler. I'm the U.S. Chamber's Northwest Region Director. Today, I'm going to give you an overview of all of the steps that Congress has taken over the past month to respond to the ongoing coronavirus crisis. I will mostly focus on the recently passed CARES Act, but I just want to briefly touch on the other two significant things they've done. In early March, Congress passed a supplemental appropriations bill to fund a lot of the government operations to respond to the crisis. That is often referred to as Phase 1. And then in mid-March, they passed the Families First Coronavirus Response Act. This piece of legislation included provisions requiring businesses to provide paid sick and family medical leave. It expanded eligibility for unemployment insurance, and it provided additional resources for state Medicaid programs. I will briefly talk about the paid sick and family and medical leave towards the end of this presentation. But as I said, the most time of this presentation, I'm going to focus on the Phase 3 or Coronavirus Aid, Relief, and Economic Security Act, or what's being called the CARES Act. As I go through this, I want everyone to just keep in mind there are a lot of aspects of this legislation that are rather vague or they're ambiguous. This was done partially intentionally to provide as much flexibility as possible to the administrative agencies that are implementing these programs, so that they can respond as things come up and make it much easier for them to get money into the hands of businesses. But additionally, it's also a consequence of how quickly this process moved, and a lot of things that would otherwise have happened during the legislative process did not happen here. So we are having to rely a lot on guidance from the SBA, the Department of Labor, and the Department of Treasury in getting a lot of answers to questions that come up during these presentations, and we are trying to get a lot more clarity as we go. Things are changing in real time, but the agencies are moving pretty quickly to implement these programs. So next slide, please. To give you a broad overview of the CARES Act, it is a $2 trillion package. That's about just about 10% of US GDP. It is intended to be a bridge to avoid a prolonged downturn. At this point, I think it's widely believed that we are going to go through some sort of recession. The goal here is to make that as brief and as shallow a recession as possible. So Congress has they have enacted a historic package here. This is the most expensive package I believe that Congress has ever passed. It is intended to, as I said, help us get through to the other side of this with as minimal damage to the economy as possible. It is possible that Congress will have to come back and do a Phase 4 bill and provide additional resources depending on how long this crisis goes on. But for now, this is the most recent package. It can be broken down into basically three sections: aid to individuals, aid to businesses, and then a variety of other aid packages to hospitals. There's $100 billion for hospitals. There's $150 billion to aid to states and localities. And then there's a number of odds and ends that are also included in the bill. But the most significant portions of this bill have to do with aid to individuals and aid to businesses. On the aid to individuals, the bill provides a one-time payment of $1,200 per individual for individuals making less than $75,000 per year. That amount will gradually phase out between the income levels of $75,000 and $99,000 per year, and anyone who makes over $99,000 per year will not receive any check. For married couples and those filing joint returns, the amount of money provided will be $2,400 per joint return, up to an income level of $150,000 per year. After $150,000 per year, that amount gradually phases out until you reach $198,000 per year per joint return, Joint filers over $198,000 per year will not receive any check. There's also an additional $500 provided per child for both individuals and joint filers. The bill also vastly expands the unemployment program. The Phase 2 bill, as I mentioned earlier, lifted a lot of the eligibility requirements to obtain unemployment insurance, so long as you're obtaining that due to the COVID-19 crisis. In the Phase 3 bill, Congress went further and they provided an additional $600 per week on top of what the regular state benefit would be through July 31st. All a state needs to do to provide this additional $600 is accept that assistance from the federal government. Eligibility for this expanded unemployment is not indefinite. It will expire when the individual is called back to work. So if an individual has been laid off by his employer and then the employer is given the permission to reopen and they call back their employees, that is the point when the expanded unemployment benefit expires. How does a worker obtain these benefits? The worker would do it the same way he would go and get unemployment in any other situation. They file through their state unemployment insurance office. Next slide, please. So the bulk of the bill's provisions really have to do with aid to employers. The policy goal here is that this is seen as a temporary disruption to the economy, and the most important thing is to keep employers in business to the extent that we can keep them in business and keep their employees tied to their employer, so that when this crisis ends, employers can go back to work as quickly as possible, and their employees can go back to their workplace as quickly as possible. So the bill has taken a number of steps to enable employers to continue paying their employees through the duration of the crisis, even if the business itself is not open. So those provisions break down into three categories. There's provisions that apply to all employers, provisions that apply to larger and mid-sized employers, and then some of the most robust provisions have to do with the provisions that apply to small businesses, the self-employed and independent contractors. Next slide, please. So as I said, there are provisions that apply to all employers, irrespective of size. And one of the first things that Congress did is they recognized that in order for employers to continue paying their employees, they're going to have more liquidity, more cash on hand. So one of the steps they have taken is they have temporarily modified some of the tax code to enable businesses to have more liquidity. The most significant of these steps is that they have allowed businesses to delay payment of the employer portion of payroll taxes, that 6.2% per employee that employers pay to Social Security. They are allowing businesses to delay that payment between now and January 1st of 2021. If businesses elect to delay that, the amount that they are delaying, 50% of that will not come due until December 31st of 2021. And then the remaining 50% will not come due until December 31st of 2022. Again, this is intended to allow businesses to have that money so that they can pay their expenses and pay their employees during the crisis. Now, there is one restriction. If an employer elects to delay payment of the payroll taxes, they cannot then apply for loan forgiveness under the Paycheck Protection Program for small businesses, which I'm going to get to a little later. Additional changes to the tax codes that have been made through the bill include allowing businesses to now carry back for 5 years net operating losses from 2018, 2019, and 2020. For corporations, for the most part, they can accelerate recovery of AMT credits. And then they have restored the qualified improvement property deduction that was eliminated in the 2017 tax law. This is a provision that is important for businesses that have made improvements to their property. So a lot of restaurants and a lot of retail establishments will look to avail themselves of this restored tax credit. Next slide, please. Another provision that isn't getting much attention right now is the employee retention tax credit. This is a credit that was a late addition to the bill. It was actually not in the original bill that was introduced just over 2 weeks ago. What it is intended to do is to help employers who have been shut down or who have had to shut down, but yet they continue to pay their employees. Or that the employer has seen a 50% drop in gross receipts in a quarter compared to the last year. It's a refundable tax credit for 50% of wages paid up to $10,000 per employee. So think about it as a $5,000 tax credit. And again, it is so that the business can continue to pay employees even if they've shut down. However, there are a couple of restrictions for employers with more than 100 employees. This only will apply to the employees that are not currently providing services. So if a business has employees who simply aren't doing anything right now, but yet continues to pay them, those employees, they can get the credit for paying those employees. But if they have employees who are working remotely or are actually still having, because they're essential employees, are having to go in to work, they cannot claim it for those employees. However, for employers with 100 or fewer employees, it applies to all employees paid during the eligible period. So if you have employees who aren't working, for businesses like that, if you have employees who aren't doing anything and you have some employees who are working remotely, you can, if you have a 100 or fewer employees, you can claim this tax credit again for paying all of those employees. Again, they have restricted this. If you claim this tax credit, you cannot then not apply for loan forgiveness under the Small Business Paycheck Protection Program loan. Additionally, because it is a tax credit and it's not something you would receive until you file your taxes, Treasury recognizes that it won't do you any good if you have to wait to get that money. They want to get that money into your hands as quickly as possible so that you can continue paying your employees. So Treasury is exploring options to make this an advanceable tax credit that you can receive now. And we expect additional guidance on that in the coming days. Next slide, please. For large and mid-sized businesses, the bill provides $500 billion to the Treasury Department for loans, loan guarantees, or to support Federal Reserve credit facilities. Of that $500 billion, $46 billion has been carved out for the airline industry and air cargo, as well as critical national security businesses, but $450 billion has been made available for businesses at large. These will be largely traditional loans provided through traditional private financial lending institutions, but there are some restrictions being placed on the loans to businesses who take them out. Specifically, there are going to be restrictions on the ability to have to do stock buybacks during the life of the loan, plus 1 year after that the loan is paid off, as well as limits on executive compensation. Next slide, please. The most significant new program created under this bill, and the one that's getting the most coverage in the press, is the Small Business Paycheck Protection Program loan. This is a $349 billion loan program for small businesses, generally less than 500 employees, 501c3 nonprofits, the self-employed, sole proprietors, and independent contractors. That allows these businesses to obtain loans equal to 2.5 months of their payroll, up to $10 million. It is a loan that will be provided through local and national lenders. So you would go to any SBA 7A qualified bank. However, the SBA is working on an expanded list beyond their 7A lenders of other financial institutions that you can obtain these loans through. They have made these loans very easy to get. They are requiring very minimal things in the application process to obtain these loans. There's no collateral required. There's no personal guarantee required. But the most attractive piece of this program is that these loans, after 8 weeks, will convert to grants equal to the amount spent on payroll, rent, interest on mortgage, and utilities. As I said, the intention here is to make sure that businesses can keep paying their employees during the duration of the crisis. And that means that even if the business is closed, is not operating, or is simply not doing much business, they can obtain this loan and continue to pay their employees. The point, as I said earlier, is that they want to keep the employee and the employer connected. They don't want to see employees have to get laid off or go on public assistance. Now, there are again some restrictions. Forgiveness for the loan will be reduced proportionally if the employer reduces the number of FTEs during the 8-week period. Additionally, loan forgiveness is reduced if the employer reduces wages by more than 25%. So on the employee reduction or on the reduction due to employees getting laid off, that means that if you have 10 employees and you only have 9 employees at the end of this 8-week period, in other words, you've laid off one of those employees, then the amount that would be forgiven would be reduced by 10%. Now, we also recognize that this bill was passed last Friday. A lot of businesses have already laid off employees before they knew this program was going to be in place. The bill allows you to avoid reduction in forgiveness if you bring back the employees and restore their wages before June 30th. This last bullet point is actually incorrect. I apologize for that. This was our understanding before some Treasury guidance came out midweek. Under the Treasury guidance, any employee that was laid off between February 15th and April 26th, if you bring employees that laid off during that period back on board and do so before June 30th, then you would avoid any reduction in the loan forgiveness portion of the loan. Next slide, please. So I know that's a lot, and there are probably a lot of questions about who qualifies, what information do I need to have on hand when I apply for the loan. The U.S. Chamber has created a 4-page document that walks you through the loan program step by step. What types of businesses are qualified for this? What types of information do you need to factor into calculating the amount of money you need to request in the loan? And then what types of things are going to be taken into consideration to determine loan forgiveness? We have put this on our website. It's uschamber.com/SB loans. I've also been distributing this document to all of the Idaho local chambers. So I believe that Sean has a copy as well. And I haven't looked at your website, but I think you probably have shared it with your members already. Additionally, as I said earlier, this is something that the Department of Treasury and the SBA they are sending out additional guidance on a daily basis on this program. But again, the intention is to make this program as simple to understand as possible and allow banks to get this money into your hands as quickly as possible. Next slide, please. Next one, there you go. The other significant small business program that's in the bill is the SBA Economic Injury Disaster Loan Program. This is actually an existing program that a lot of small businesses that have gone through earthquakes, tornadoes, hurricanes, and other natural disasters have often availed themselves of to help them until their areas recover. It's open to small businesses and nonprofits, including faith-based nonprofits with fewer than 500 employees, sole proprietors, and independent contractors. It provides $2 million in working capital up to a 30-year term at 3.75%, 2.75% for nonprofits. It is an actual loan. It does not convert to a grant as the PPP loans that we just discussed do. And payments on the loans are deferred up to a year. Under the CARES Act, they have sought to make these loans easier to obtain. They have the loans will now be based on credit scores. They're not going to require that you produce tax returns immediately. For loans up to $200,000, you do not need to provide a personal guarantee. No collateral will be required for loans of less than $25,000 or less. Above that amount, a general security interest will be required, but that doesn't necessarily have to be tied to real estate. But the most significant change, this is brand new, is that when applying for this loan, a business can request up to a $10,000 emergency grant, which the SBA will provide within 3 days. And this grant does not have to be repaid, even if your application for the underlying loan is denied. You still do not have to repay this $10,000 grant. It is, again, there is an interaction with the Paycheck Protection Program loan. If you obtain an economic injury disaster loan and the $10,000 grant, that $10,000 grant will then be subtracted from any amount forgiven under a PPP loan, loan forgiveness. The intention there is they want to make sure that employers are not double dipping. But you can obtain both an EIDL loan as well as a PPP loan. You just have to understand, you cannot obtain an EIDL loan to use for the same purposes that you would use a PPP loan for. And then additionally, that $10,000 grant, if you receive the grant, will be subtracted from any amount that will be forgiven under the PPP loan. This is a direct loan provided through the SBA. Unlike the PPP loans, which you go to a bank for, the EIDL loans, you go directly to SBA.gov and you apply there. I've been on a couple calls with some lenders this week, and they have indicated that some of them are willing to help you with the loan process and advise you on the loan process for EIDL loans. However, they are going to send you to SBA.gov to do the actual application. So this is one of those things that I would encourage you, if you're looking to get both an EIDL loan and a PPP loan, talk to your lender to understand how they're going to interact and get the lender's advice on that. Next slide, please. Now, lastly, as I mentioned earlier, the Phase 2 bill included some provisions requiring businesses to pay sick leave and pay family and medical leave during the COVID-19 crisis. It is requiring employers with fewer than 500 employees to provide 10 days of paid sick leave if the sick leave is related to COVID-19. That sick leave can be taken when the worker is ill, quarantined due to exposure, to take care of a sick or quarantined family member, or to take care of a child during school closure. The leave will be paid at that employee's regular rate of pay, up to a maximum of $511 per day if the employee is having to take care of themselves. If the employee is taking the sick leave to care for a family member, they will be paid at 2/3 the rate of their normal pay, up to a maximum of $200 per day. This amount will be fully reimbursed by the federal government through a payroll, a tax credit against your payroll taxes. But again, we recognize that you're not going to get that money until you file your taxes. So the Treasury is also, in this case, looking for options where they can provide an advance payment of the tax credit so that you have the money now to pay the employee. This leave will be in addition to any other leave that the employer already provides. And there is an exception included in the statute for businesses fewer than 50 employees. Those employees can request to be exempt if providing that leave for caring for a child would threaten the viability of the business. This is another one of those examples where the law was left very vague, and we're waiting for additional guidance from the Department of Labor on how they are going to apply this exemption. So again, we hope to see more on that in the coming days. And then lastly, the paid sick leave benefit here would not be available if that employee has the ability to work remotely or telework. Next slide, please. So in addition to the 10 days of paid sick leave provided for under the Phase 2 bill for businesses with fewer than 500 employees, the bill also requires businesses of 500 or fewer employees to provide up to 10 weeks of paid family and medical leave, but only if that employee needs to take care of a child due to a school or child care closure caused by COVID-19. That is the only reason that an employee can claim the paid family and medical leave. The leave is going to be paid at 2/3 that employee's regular rate of pay at a maximum of $200 per day and $10,000 in the aggregate. Again, this is the paid FMLA is in addition to any leave an employer already provides. And just like with paid sick leave, the federal government will reimburse the business through a tax credit against their payroll taxes. And again, Treasury is exploring options to provide an advance of this payment so that the money is in the business's hands now to pay the employee. And then again, lastly, there is an exemption created for employers with less or fewer than 50 employees if allowing the employee the leave would threaten the viability of the business. But again, we need more guidance from the Department of Labor to better understand how that provision will be implemented. And then lastly, paid sick leave is not available if the employee can otherwise work remotely or telework. Next slide, please. So I know I ran through a lot very quickly. It is a lot of information. It is changing very rapidly. As I said, the bill was written to give as much flexibility as possible to the agencies that are going to be implementing this. So the agencies are putting out guidance in real time about what businesses need to do to access these benefits. We are keeping up with it as quickly as we can and providing as many resources as possible to employers. You can go to our website, uschamber.com, to obtain these resources. We have created, as I showed you earlier, we've already created a guide on the PPP program. It's a step-by-step guide and checklist for what businesses need to do to avail themselves of the PPP program. We've also created a guide on the Economic Injury Disaster Loan Program, as well as the Employee Retention Credit. In the coming days, we expect to have some guides on the paid sick and paid family medical leave provisions. All of these will be posted on our website. I'm also distributing them to all of the local chambers in Idaho so that they can also share them directly with their members. And we have a number of other resources specifically for small businesses on our small businesses resources website, which is uschamber.com/co. This has more to do with a lot of best practices for businesses that are continuing to operate through the crisis, or guidance on what they need to do in the event of a stay-at-home order. So with that, I'm going to hand it back over to Sean, and I'm happy to take any questions.
Thank you, Chris. Remember, everyone can type your questions into the chat box if you want to get your question in now, and then we can open it up for some callers later to questions. Chris, we do have one question from Mick Armstrong. Will the paid leave be classified as regular taxable W-2 wages? And can the employee continue to make 401k contributions?
That I don't know about the 401k contributions. I'll have to look into that. I'll get back to you, Sean, on that, and so that you can follow up directly with Mick.
Okay, thank you. Any other questions via chat? I have opened up everyone's lines, unmuted them. You may have to unmute yours on your end, but if any of our callers have questions, please go ahead.
I have a question. My name is Joan Stevens with Sandler Training, and I just received in my email a Paycheck Protection Program borrower application form from a friend in New Hampshire that is new as of yesterday. Is that the one we need to fill out?
I would actually they go directly to the SBA website and make sure that the application they have on their website matches that. I suspect that it probably is because they just released the application on Wednesday afternoon. But like I said, they've been making a lot of changes day to day as they get this program ready to go.
Right.
I want to make sure you have the right document. Today is the first day that banks are able to accept applications, but a lot of the banks have already told us that they still need more guidance from the SBA before they can actually process the loan applications.
Okay. Thank you.
Any other questions? Those on the computer can also unmute yours and ask questions directly if you'd like. Okay. Chris, it looks like you did an excellent job of informing everyone.
Well, I just want to make the offer that, if any additional questions come up, and if Sean's willing, just send them to Sean and he can send them to me, and then I can look into them with our policy question DC. We are working on a frequently asked questions document because we've been doing these presentations all week long, and we're getting a lot of the same questions. And a lot of the answers that we have right now are that we just need more guidance from the Department of Treasury or SBA. So as we get more information from the agencies, hopefully we'll be able to give you a little more clarity on some of these questions that we've been getting.
Can I ask a question?
Yes, sir. Go ahead, Mr. Perez.
The emergency loan program, the $10,000 I understand, the up to $2 million I understand. What are the parameters for determining the loan amount that you're requesting? On the one program, it's 2.5 times the salaries and the expenses. So I understand that gives you the cap. But what determines what you apply for under the other one?
Let me just look. So the documents that I have, it simply says working capital. Look on the SBA website, sba.gov. That's where you would actually go to apply for the loan. And I think they have a little more information on what they consider as working capital and what the loan can be used for.
Okay, thank you.
Any other questions?
I have a question.
Okay. Caller 2, go ahead.
This is Stephanie Johnson. I think I'm the caller.
Yes, sir. Yes, ma'am.
I have a question. We are a new business that just opened in January. Are we still eligible to apply for one of the PPP loans?
So you are, let me just. Here we are. Yes. So if you are a business that was not operational last year, the way you would calculate your loan amount would be 2.5 times the average total monthly payroll costs incurred for January and February of 2020.
Okay. We worked about 2 weeks in January, and then all of February.
Well, so yeah, so I mean, you are eligible, but
okay.
When you make that calculation, it's just going to be based, on the average for those 2 months.
Okay. Okay, thank you.
I think I saw caller 4 want to ask a question. Go ahead.
Okay, my question is I've heard that some of these apply for people, again, who are brand new businesses or sole proprietors. Maybe they're not taking payroll, but they're taking distributions. Is that true?
Yeah, if the sole proprietor, independent contractors, and self-employed, they can apply for the loan. And one thing I want to also specify while I'm thinking of it too is there is a bit of a concern out there that, given the demand, that the money for these loan programs are going to run out very quickly. So if you think that you fall into any of these categories, that you would be eligible for a loan, talk to your lender as soon as possible. Don't wait, because it's unclear when Congress would be able to come back and add additional money to the program, and if they even would. So again, go look at our document on the PPP program. If you even think that you fall into any of those categories, talk to your lender as soon as possible about getting one of these loans.
Okay.
That document Chris is talking about is on our website, on our COVID-19 business update page. It's right there at the very top right. Okay. Any other last questions? Excellent. Chris, I want to thank you so much for taking the time to give us this presentation. And if you want to review this, the slide deck and the recording will be made available on our website shortly. So thank you all for attending, and we'll continue to bring you more information as it comes available and keep you informed. Thank you all.
Thank you, Sean.
Thank you.
Thank you.
Thank you.